real estate investors seem to have this one thing in common. Almost all of them want to quit their jobs. You don't see it in stock market investors, right? Or anybody who invests in really anything else. Like maybe you have the day traders, but you don't hear too many people say, hey, I'm sticking money in index funds because I want to quit my job one day. But you always hear it with these people buying rental properties or investing in real estate otherwise, right? It makes sense. That's what I wanted too. So today live, we're not going to talk about quitting your job to retire. This is not a retirement session. This is quitting your job to get into the biz and grow and make more, do something with it, right? So we'll go in this order. I'll tell you about the day that I quit. I remember it like it was yesterday. I just walked out kind of impulsively, but there was some stuff leading to it, and there were a lot of things that prepared me to get there. And then I'll give you a list of, I think I got 6 things today that made me feel prepared. I had the things that I needed to take that leap, so I'm going to share those things that I think everyone needs to take that leap, but they were definitely very important to me. You might add a few things of your own onto that list, but I think this will give you a little bit of a formula and at least a checklist, right? And a checklist means you kind of have a target to chase after so that you could feel prepared one day as well, if you haven't already, to dive on in and do something like this full time. This is not a go live in a van somewhere by a beach, and chill out off $2,000 of passive income live session. You know, I don't care about that shit. I'm in it for the game. So if you want to get into the game, here's some tips to get out of whatever you're doing at some point and then get into the game. Now, before we actually get into this session, we're going to do our weekly giveaway, right? So coupon code is all caps, GTFO. Let's get the fuck out. F-bomb early in the live. Enjoy it. Happy Friday. The quarter's coming to a close. I don't care about anything because I got my taxes done for the most part. So yeah, you get an F-bomb real bright and early. GTFO is the coupon code. All caps, no spaces, no periods. Look, my weekly disclaimer. I'm going to go ahead and announce this coupon code is active after the live session's over in a story. I'm going to drop a link to my bio so you can go find your way to the store and then try to get some freebies. The course is not going to be included in freebies ever. Don't ask, right? It's already a value bomb, and I'm not giving away a $500 course. But the tools in the bio, all available to you. We'll do 40 today, whatever. I used to do 25, but let's just give you guys some more free shit. Who cares? I don't want the money. Just kidding, I do. But let's do 40. And if the coupon code does not appear when you are at the checkout spot or right about to click the checkout button, that means that either the code's not active yet, I'm going to activate it right after the live, or all 40 copies have already been redeemed. If you click that pay now button and you didn't enter a coupon code and get it accepted, you're giving me your money. Thank you very much. I appreciate it. I'll use it on something honorable like buying shares of stuff that you guys tell me to in DMs that are going to lose money anyways. So it kind of just goes back into the earth, right? Recycling your funds is what I call it. Or I can give it to the tax man, whatever you prefer. So the coupon code is GTFO. Morning, y'all. Thank you for joining me today. I'm scruffy today. I didn't do my my Thursday weekly haircut. I cleaned up my beard as an excuse. So if I clean up my beard, maybe I won't look like such a mess, but I definitely need to just de-shag a little bit. So you guys get a version of me that looks like I just rolled out of bed. And I kind of did at 6 a.m. this morning. And did my usual morning routine. You guys know my morning routine from my live the other day. I sit in the shower with my toothbrush like 10-15 minutes and I just scroll Instagram, see how many deal calculators you guys bought while I was sleeping, all that good stuff, right? But it's a luxury to be able to have that morning routine. That wasn't always my morning routine. I used to spring up at 5:30, feed the dogs, maybe take them for a spin, pack my lunch, sprint into the office, drive downtown, park in this expensive, shitty garage with homeless people banging in it while I'm parking at 6 a.m., and then walk all the way to the office that I worked in, have to get in there 7 sharp, or else I was going to get a nasty email from my boss, who was a friend of mine. And one day I told him to fuck off. Not him exactly. He's a nice guy. I like him still. But one day I got tired of it, right? And I think you guys know what led up to this. I bought a rental property, my first out-of-state rental in August of 2016. I fixed it up, tried to do the whole BRRRR thing. This is kind of how I quit. Tried to do the whole BRRRR thing with this property. Thought one day I'll have enough passive income that I'll just back off the job altogether and maybe do a little bit of real estate stuff. Maybe 10K a month was enough, right? Little did I know 10K a month is not really enough once you get there. Instead of keeping that property as a rental and making $200, $300, maybe $400 of net cash flow a month, I decided to dump it. Mike persuaded me, my business partner, to immediately sell it and take $20,000 today instead of $300 a month. That $20,000 today went back into finding more deals that we could sell and make $20,000 on. Except we didn't fix them up. We were wholesaling at first, right? We eventually evolved into like a more flip version of wholesaling. Now we kind of have a hybrid model now. But back then we were just traditional wholesaling. So sold the first property, bought some marketing pieces, bought 3 more houses, resold those houses without doing a thing to them, made 5, 7, and 12. Did another deal, made 15. Did another one, did 12. And then in August of 2017, so exactly 1 year after I bought my first out-of-state rental, we nailed 2 deals in 1 month, and we had a pipeline full of other deals coming up for future months that we wanted to attack. We had sellers we were following up with. We were meeting up at 6 a.m. at a little office Mike was renting down the street from the big office that I worked at in downtown Sacramento, right down the street from the Golden One Center, the arena. We'd meet there at 6, and we'd bang out calls before I walked like 1 block to the other side, or to the other side of the block to get into my building and make sales calls, because that's what I did, right? And we had everything kind of lined up and work to do and money to make. And in August, we nailed 2 wholesale deals, closed 2. One made us 14, the other one made us 25, or maybe it was 15 and 24. It was 39 total in 1 month. We're like, God damn, $40,000 is pretty cool. So that kind of primed me. And then we were hiring a virtual assistant over 1 weekend. I was getting ready to do it. I come in on Monday, 6 a.m., bright and early, get to my office, ready to train this guy to, I don't know, he was like scrubbing leads off some county records that we found or something like that, right? And this guy didn't show up at 6 a.m. when we were supposed to. He was like in Pakistan or India or Philippines, I don't remember. We had a bunch of virtual assistants at some point early in this business. We have 0 now. It's a horrible idea, hiring a virtual assistant. Got on this call at 6 a.m. He no-showed. Little did I know, virtual assistants are notorious for not doing what they're supposed to do, taking 20 jobs at once, being unreliable, being completely bullshit, right? I was so frustrated, and I needed to get another one, so I cut into my own work day to do it. And it just so happens on that same morning, a new sales manager that the owner of the company hired, who was just super micromanaging, he didn't like to leave me at my business, even though I hit my quota all the time. He wanted me to follow certain rules, I understand. He got mad that I didn't click like a self-generated button on a deal that I closed, and he didn't give me the self-gen credit. As salespeople, we're required to close a certain amount of self-generated deals every week. And I did get it done. I just didn't actually do the administrative task of, checking it in Salesforce. So he discredited me that one and took me out of like the hot leads rotation for that week. A lot of jargon, whatever. That pissed me off because I was already pissed off about this virtual assistant not showing up and me having to hustle through the morning to figure it out and like kind of damage control, go and get a new one and try to get this started. And then being micromanaged pisses me off, especially when I'm like doing my job correctly and I miss one little thing, I'm kind of being over punished for it, right? I have a thing for insensible authority. People have a sense of authority without like reason behind it really irritate me. I don't really stand for it. I don't do a good job of saying, okay, I'm gonna be diplomatic here. I just kind of throw my middle fingers up. And I made $40,000 in the previous month working 2 hours a day. So yeah, I literally got up, I said, cool, man, that sounds great. I'm gonna pack my stuff up and get the hell out of here. So at 9 a.m. on a Monday, I just grabbed like whatever was at my desk. I had a little like statue of an Akita. I used to have an Akita at that point. My mouse, and I had like a nice little mouse that I brought to work. A tub of protein that was in my drawer, and I don't know what else. That might have been it. And I walked on out, and on the way out, the owner called me into his office. He's like, hey man, super cool dude. He's like, what's going on? I'm like, yeah, I'm just kind of done dealing with it, man. I got some other stuff to do. And he said, I understand. If I was you, I would have quit the job months ago. Because he knew my position. He knew what I was up to. So that was like reassuring. He didn't say, hey, hold up, slow down, chill, stay. He was like, yeah, dude, just get on out. You should have a while ago. So I did. That was kind of the impulsive story of quitting my job. But like I said, there was a lot of things that led up to it, right? To that kind of tipping point, breaking point, whatever you want to call it. And there always is a little bit of a leap associated with it. Even when you're ready, when you have all these things I'm about to tell you about, you're going to have to dive. So let's talk about what it takes to get to the point where you can kind of do what I did, or maybe do it in a more reasonable fashion. Everyone's got their own flavor, right? My flavor was, fuck it, let's go. No plan, nothing like that. But your flavor might be a little bit more, I don't know, premeditated, organized. You might give a 2-week notice. But I think you'll still need these things to be able to take that lead. There's 6 of them, but they all fall into 2 categories. There's really 2 things that gave me what I needed to, the confidence I needed to get on out. And those 2 things are security and opportunity. Right? We all crave a little bit of security and safety. Risk is something that concerns us when we make decisions like this, especially when it's something that most people around us are going to tell us is a bad choice or is risky or whatever it is. I think I was making like $110,000 a year, good perks, pretty easy job. I was good at it. I got to do my little side hustle on the side just fine. It was cushy. I was 27, so I'm sure I would have made more than $110,000 today if I'd stayed there and kept doing this side hustle, but I never would have done what Ace is doing now if I did. But it was a good setup for sure. So to leave a good setup feels risky. So you have to have some sense of like security, a safety net, right? So I'll tell you what the safety nets that I had in place were, and then opportunity on the other end. Something's got to drive you forward. It can't just be fear and the mitigation of fear. It's got to be something that inspires you, right? So I'll tell you where I got my inspiration as well. So 6 things. We'll talk about the security first. Number 1 is cash. So how much cash, and this is impromptu, by the way, guys. I plan this live in about 15, 20 minutes before the session. I always do. I don't usually sit here and take hours and script this thing out. This is off the top of my head. So I'll give you some examples as I think of them as I'm speaking. So how much cash did we have? I think we had, Mike and I collectively, about $100,000, but we owned a rental free and clear that we could have always sold to, and we had more business coming in. So you've got to have some cash reserves to cover your expenses, to feel like you're not going to be in a position where you can't think of your business because you're too busy worrying about paying your mortgage, right? And now I was in a position where my expenses were really low. I didn't have a lot. So $100,000 split into 2, that $50,000 each. Our business wasn't very expensive to run. It was very cheap marketing every month. We didn't have employees at the time or anything like that. I had a mortgage, but I was house hacking. All my rooms were filled, so I didn't have an expense there. My AirPods are kind of off and weird, huh? I didn't have an expense there. And cost of living was pretty low, right? So that $50,000 reserve, considering everything else that was happening, was enough. It wasn't a big deal to me. So have your cash reserve. Now, if you've got a house with a more expensive mortgage, a family, an expensive business to execute upon, inventory costs, 50 grand probably doesn't do it. Hey, if you're, I really hate when that happens. If you've got a little less impulse than I did, 50 grand might not do it, right? So decide what your number is, but you need to have that number in place. This is all about being scientific, right? I'm trying to take this like nebulous concept of having the guts to quit and really break it down to like a more formulaic format for you. So decide how much you need in reserves, chase after that number, get that number, and then check that box. So number 1 is cash. Number 2 is income. Would I have quit with 50K in reserves if we didn't just make 39 the month before on 2 deals, working for a couple extra hours a day? Nah. It wasn't it wasn't a lag. It was, for some reason, Siri kicked on. It's really annoying. Would I have pulled the plug on just a 50K reserve? Absolutely not. No, but the fact that I doubled, so between Mike and I made 39 the month before, right? That's 20 each, ballpark. That's double what I made from a full-time job at that time, and I believe that I could reproduce it. So income is important. Now, I remember getting on the phone with another real estate investor, a guy who was pretty popular at the time, or at least seemed like he was doing pretty well at the time. I don't know exactly what that measure is, but to me, he was on the Bigger Pockets podcast at some point, right? So we talked, and he said, Elliot, look, I didn't replace my income for like 2 years after I finally quit. And for some reason, that stuck in my head. And I was like, that's bullshit. I want to replace my income. I want to replace my income before I quit. And how do I do that? Well, it's sure as hell not through passive income and rental properties. You need a business, right? You need a business. Oh, hey, is everyone having problems with the live? Are we good? Does it sound good? You need me to exit and come back? Okay. I don't know if you guys are having issues or it's the issue on my end, but I just got off the Wi-Fi and maybe this will help. Look, the passive income doesn't get it done. At least not in my eyes. It's going to take too long to get there, and like I told you, it took me a year from start to getting on out and replacing my income. Have a business. Have a model to generate revenue. You want revenue, right? So generate some income. It doesn't have to be double. It could just be a consistent 3, 4, 5, 6 months of the same amount of money that you make with some confidence to believe that it's going to keep happening, right? Decide what that number is for you. Don't take much of a pay cut unless you really don't need that kind of income and the prospects of getting back to it and growing are very certain for you. Don't take much of a pay cut. Figure out how to make the money, because quite honestly, if you can't design your business around real estate, which there's a lot of different options to make money in real estate, right? If you can't design your business around real estate so that it creates as much as a W-2 makes for you, either your W-2 is too good to quit at this point or your business is too bad. That's it. I'm gonna let that one sit for a second. Make a good business. The next thing, number 3. So 2 is income. Number 3 is the building blocks. What are the building blocks? I call them the subunits of revenue, right? What are those for us? Well, for us, that was, and it still is, 2 things. It's property leads and investor leads. Are they coming in? Were we capitalizing on all of them? And the amount that came in and the quality of them that generated us the $40,000 month and the bigger months before, was that improving? Were there more? And did we have enough in our pipeline to consistently believe that we can, because in that last bit, that income bit I told you, hey, you need the income and then you need the confidence that it's going to persist over time, right? Well, where does that confidence come from? It comes from the subunits of revenue. So for us, that was leads. Do we have enough property leads coming in? Do we have property leads coming in at a discount? Do we have offers out to sellers? More of them than we had last week. Was last month not just a flash in the pan? It wasn't a fluke. That's what we needed to know, right? And also, do we have enough to take up our full day worth of time now that we're going to be working full time towards this thing? Is there a good enough reason? Because we were working maybe average of 3 hours a day and then a little bit more on the weekends on the side. Could we put 8, 9, 10 hours a day into working this same pool of leads, right? The pipeline, subunits of revenue. So have a plan to generate those things. It's part of your business model. Do you have a business model that's going to keep feeding you income? Right? You have to feel like it's not lucky. So you need to have some metrics in place to go, what are the pieces that come into my business? Whether it's customers, whether it's product, whether it's something completely different. If you're going to be a realtor, for example, right? You still need a lead pipeline. So do I have what I need coming in to know that this income is really going to keep happening and growing? That's number 4, right? So number 3 is the subunits of business. And then we kind of move into the opportunity phase. So those first 3 are like the security phase, right? Do you have the cash? Do you have the current income and the business income? And then do you have what you need to feel that income is consistent? The next bit is the upside. Do you have growth? That's number 4. We had growth. We knew that the leads coming in were increasing. They had shown a steady increase and we were going to do more. We had a clear plan to continue to grow them and accelerate that pace, and to accelerate the pace of the buyer leads coming in, improve the buyer leads, generate bigger revenue and bigger spreads on the property. The trajectory was very clear to make more money, because I sure as hell would not have quit my job because of a 40K month if I thought I was only going to be able to generate 40K months between the two of us in perpetuity for a full year. And as a matter of fact, it didn't work out that way. I knew there'd be ups and downs, right? But the first month after we quit, we made 15. The following, we made 0, but we picked up a deal that we flipped. Eventually, we sold it 10 months later and we made 90 on it, right? So we saw that good deal come in. And then the following after that, the 3rd month after quitting, it was December. In December, we had 2 deals close, a 15 pop and a 60 pop. Our first 60,000, we never had a deal over like 25,000. So we had a 60 spread on that. And it was just the 2 of us. No employees, no assistants, a $400 marketing budget. So we had all those pieces of the puzzle dialed in. And I'm just going to scroll to the bottom of this. Stop giving out the code, Sean. If they didn't have it early, don't let them have it. We had the pieces coming in and we knew that growth was there. Do you have something that's compelling to you, or do you have compelling evidence of growth on the table in front of you? That's a big piece of the puzzle. That checkbox needs to be, boom, very clear. Don't quit until you have that. Because no one starts a business just to like kind of replace their income, work really hard to replace their income and take on all this additional risk and volatility and stress, right? you want to start a business to get something bigger, better than what you had, and for it to be able to carry on its growth kind of on its own, right, or naturally be able to like compound its value over time. So do you have growth? That's number 4. Number 5, I'm gonna get a little toxic on you. And this is kind of part of that inspiration bit, right? I call it the opportunity bit for the second half, but really this is inspiration. And opportunity is a piece of that. Number 5 is contempt. And don't take it the wrong way, right? Don't tell me to go see a therapist about this. You gotta have a little bit of a chip on your shoulder. There's gotta be something under your ass that burns, that goes, hey, I don't wanna fucking do this anymore. I'm tired of this shit. And I needed that impulsive moment at my job where I was being micromanaged and I got pissed off, and I already had all those other pieces in play, right? I had the security and I had the growth prospects lined up. And then I have this next thing I'm gonna tell you, number 6. But I had those other building blocks behind me, right? I had the foundation of being able to get on out, and then someone pushed me. You need a little bit of, fuck this. I'm done with this. I've always kind of had that in my temperament. You gotta find something that gives you a little bit of like fire to say, I don't like this enough. This is not what I want, right? You've got to feel like compelled to leave. So find that thing, right? It's really hard when you have a really good job and it's a great place. Maybe you feel like you're worth a whole lot more. Perhaps that's what drives you, right? I thought 110 was cool at the time, but I didn't think it was enough money. I didn't think I was given the opportunity to make more money at the rate that I could have. I felt like I could have been worth 500 very quickly, but the environment didn't allow me to actually go and like realize those skills. I felt like I had a lot of underutilized skills. So yeah, that made me feel like I was better than the opportunity that was served to me. And then I had a little bit of a moment there where I was like, nah, I'm definitely not gonna deal with this. I've got something better to do. So find that little piece of chip on your shoulder, whatever it might be, that makes you a dog, because there's nothing that can replace that back on the wall feeling, right? When you got your back against the wall, you do things that you normally wouldn't. And that leads us to number 6. You gotta have the guts, right? That's the politically correct term now. I would say you gotta have the balls, and for my female audience, you guys love when I say you gotta have the eggs. Right? You gotta have the eggs for it, the balls for it, the guts for it, whatever you want to call it. It takes courage. You can have everything you need logically to walk up to the edge, and then you can have this sense of, oh, I'm done with this. But if you don't have the guts to do it, you're not going to leap. So you got to have a little bit of impulse. You got to take the risk. You got to be brave, and you got to have a little bit of rationale behind it. But ultimately, you see a lot of really smart people that never get it done because they're afraid of something. Really capable, hardworking people that just, there's a lot of you watching this live are smarter than me, and you'll outwork me. That's it. I mean, it's the truth. And when you do it, you'll come across a lot of people that are smarter than you, that'll outwork you. A lot of my investors are smarter than me and will outwork me, quite frankly. Right? But I'll do things that they won't. So you got to find the courage. That's it. Those are the 6 tips, folks. This was a simple live, but I think a little bit of like tangibility to what does it take to quit will help a lot of you. Having something on paper, hey, this is what I need to have in place before I can go. A lot of people don't have a plan. We talked about this in my course. Why don't people, I'm not trying to plug the course, but I talked about this in the course, and I realized the more I talked about it, how pervasive it is. Why don't people buy good rental property deals or ever pull the trigger on a rental property deal? Well, oftentimes it's because they don't actually know what they're looking for. They don't have clearly defined criteria. Right? So you don't have clearly defined criteria. If you don't have clearly defined criteria on what you need to be able to transition from one thing to another thing, then you're probably not going to be able to make a logical decision around it, right? There won't ever be a good time. That's all. Folks, that's it. That's my wrap up. We'll read off 1 through 6. You need cash. You need some income. You need the fundamentals of business, the building blocks of future revenue. You need the opportunity for growth, right? Growth needs to be there. The prospects of it need to be strong. You need to kind of have that chip on your shoulder. You kind of got to hate it a little bit, your current position, to drive you into the next. Sometimes when you feel just kind of frustrated with yourself or with your environment, it pushes you out of it, right? And then you gotta have the guts to actually do it. That's all. Hit me with some Q&A, folks. I'm gonna have a sip of my coffee. I've not done a morning whiskey in a while. Are you proud of me or are you disappointed? All right, and while you're getting the questions dialed in, I'm gonna talk about something that happened yesterday that actually disappointed me quite a bit. So if you're disappointed about my lack of whiskey, I'll talk about my disappointment. I posted a survey 2 days ago, or the night before last night, saying something along the lines of, okay, actually I'll backtrack a little bit. There's a reason I posted the survey. So I made a post about sticking $100K in a bank account with a local bank to incentivize a lower rate by means of a deposit relationship. And I got a lot of comments. I was surprised by how many comments I got, almost disgusted by the number of comments I got. Said, why would you ever have $100K in the bank? You can get a much higher ROI elsewhere. What the fuck are you guys talking about? I hope they were new here. So I posted that survey saying, hey, why would you leave cash in the bank? You can get a higher ROI elsewhere. And it's basically a true-false question, right? True was like, duh, dad, higher ROI, or get a better ROI. And false was, you're watching too many TikToks, which should have been your hint, right? Should have been your hint, but still the majority, not a strong majority, but the majority picked you'd get a higher ROI elsewhere. And it's just shocking to me that there's so many people out there screaming cash is trash on like a 30-second video on a TikTok or an Instagram reel, that the majority of people seeing it are convinced. Like you almost get like fatigued by hearing the same rhetoric over and over and over, and you start to believe it. There's like a little bit of a psychological effect there. Maybe that's it. Maybe there's just like a lot of miseducation and like consumer investors. Maybe a lot of the people that voted yes have not yet gotten to the point where they have to decide or understand the importance of a cash position. But I'll tell you right now, a cash position is critical, especially in a expensive market. Now, if you're a real estate investor, you know we're in an expensive market. You definitely don't think we're in a low market. That doesn't mean you think the market's going to crash. That just means you think it's expensive, right? You need cash in the bank to qualify for a loan, to adjust for risk, right? To cover yourself, basically, to cover your portfolio as your portfolio grows. And the most important thing, to capitalize on unique opportunities that arise should they. Now, I'll go as far as to say, if you don't see the importance of, if you have a moderately high net worth and you don't see the importance of cash in the bank, you don't have enough golden opportunities coming at you. Or you bought way too many golden opportunities. Like you had plenty of golden opportunities, just tons of discounted assets thrown right at you, and you spent it all on there. Now, if I had the best opportunities in the world thrown at me, ultra cheap properties in volume, yeah, I'd dump all my money, except for just a reserve to cover like my business's operations, into those. But I don't. So I keep a certain amount of cash and say, I'm not gonna soften up my criteria that much. And I think that's a good lesson for you guys to learn, right? Think about it this way. It was very common for the crypto folks to say cash is trash, right? That's a very popular phrase because their whole like thesis is, replace this currency with that currency, this one's gonna outperform. And a lot of those people were saying that when, like Bitcoin was 70K. So they dump all their money into Bitcoin, Ethereum, whatever, altcoins that you got out there, right? They'd empty their pockets because they felt the value of the cash was diminishing, right? Well, then the value of Bitcoin got cut in half. And look, you can hold, right? People will argue, well, I'll just hold anyways, I'm not gonna sell. That's great, but where's all your extra money to buy all this discounted asset that you love? You don't have an opportunity fund. And it's kind of been proven in the stock market too, right? Like all this mid-cap tech, people emptying their pockets on like inflation fears and buying Zoom at, 5x what it costs now per share. Well, if they really still believe in Zoom, or they really still believe in Teladoc Health or whatever other Kathy Wood stock, everyone called her a genius and then her, her fund got cut in a quarter. All those stocks, if you believe in them, well, why wouldn't you have some cash on the side to buy them at way better prices? Then you got fucking schmucks like me who don't even like those stocks buying them up at a quarter of what you got them for. That's embarrassing. Keep some cash, folks. An opportunity fund. That's the key. Yeah, even Ray Dalio, like that stuff's pulled out of context when he says that, right? These guys are just moving the market around. The institutions, they love saying stuff like this because their primary goal is to take money from the consumer, and that's how they win, right? The consumer buys high, sells low, the investor gets rich. That is it. It's just a redistribution of wealth. Hit me with some Q&A. while we're here. I'll hang around for 15 minutes. Hopefully this is a useful live for you guys that are kind of on the edge of getting out of your job. I could do a more businessy live next time that gives you like some of the how to build it tips. I've already done a couple of those. If you don't have questions for me, I'm just gonna scram. I got some stuff to do. Why do I wholesale instead of rent? More and quicker cash. So I like to tell my clients this. So clients used to ask me this question all the time. They don't anymore, not very often. They used to ask me, hey, if these deals are good, why don't you just keep them all for yourself? And I went, how am I gonna afford them if I don't sell them to you? If I bought every deal that came our way right now with all the cash in the bank and as much financing as we can get, two things would happen. One, I'd run out of cash. Two, I would not be able to have an income to show to a lender to qualify for financing. So we end up selling about, by means of total like properties that we sell, like value. Last year, we ended up selling about $11 million worth of property, and we kept about $4 million worth of property. Now, obviously, our purchase price is very different on those two, right? So yeah, we flipped about 11 million worth, kept about 4. So somewhere around 27% of our total gross receipts stayed in our portfolio. That's a healthy balance. We probably should have kept a little bit more. We showed a little too high on our tax return. We're gonna pay too much, but quality problem. I'm not too mad about it. Now I have a nice big cash reserve for if deals get cheaper or other opportunities arise. So that's why we sell. All right, you gotta have the business. The business is a better investment than the rental property. Let's make something crystal clear. If you can come up with a good business, it's gonna outperform your best investment all the time, your best conforming traditional investment by a long shot. It should, or else it's not that good of a business. If you show me someone whose rental property outperforms ACE, I'll shut the doors right now. How do you find deals? Off market, dude. Off market. You want me to give you a quick breakdown? All right. Direct to seller. That's mail, text, ringless voicemail, cold call. Be careful with the phone stuff. It could be illegal. Broker relationships, pocket listings, reaching out to brokers, trying to find off market deals. The next bit is wholesalers, then online forums and groups, and that's about it. That's everywhere we've gotten deals from. Direct to seller, brokers, wholesalers, online groups. Easy. You figure out the rest. I'm not going to give you the whole business model, right? But yeah, that should be good enough. Do I use the MLS? No, not really. But you can find the occasional slightly better than usual deal on the MLS if you set up notifications for like certain property types and you jump on it like the second they hit and you make a really appealing offer. So you're kind of in like a, an upstream battle right there, or an uphill battle. I don't know, dude. I immigrated to this country. You're fighting an uphill battle with that because there's going to be people that make a stronger offer. Like I was brought a fourplex off the MLS by a realtor who happens to be a property manager for me in December, and I ended up making an offer, getting the offer accepted, and then I passed on the deal during the inspection, and it sold. So I made the offer for $245 or $240, only because I was buying the property right next door to it already. So I was like, fuck it, why not? Just wrap it into the same loan, no big deal. $50,000 down, no sweat. We made a cash offer immediately when it hit the market, the evening it hit the market. Sight unseen, we showed them a big bank statement, we showed them the property next door that we were in escrow on, and we showed them our whole portfolio. And then we showed them like our Instagram page or something like that. So major credibility package, right? Thank you, sir. I just did just fade in the top because it gets a little choppy up here. So we gave them major credibility to get that deal, right? You might be able to get a deal like that just with a simple cash offer. You probably won't get it saying, hey, finance this and that. No, we gave them a cash offer, 7-day close. Here's all of our money and here's who we are. So you would have to make a pretty good offer to get a deal on the MLS, and you have to act fast. But like I said, the result was us negotiating the deal down due to inspection. We needed a lot of new mechanicals and a new roof and some other deferred maintenance. We asked for $230. They countered at $240, and $230 was really my strike price for sure on that property. So they ended up putting it back on the market, and it sold very shortly thereafter for $265. So a lot of people were willing to pay more, but I was able to grab an MLS deal at $25K lower than what someone else was willing to pay for it, or what the market was willing to pay for it. That's a 10% discount. That's pretty good for someone trying to get in there and get their first deal, if it's already the right market, the right product, all that stuff. So yeah, just act fast. I don't have VAs. I don't have virtuals. I hate virtual assistants. I don't like hiring virtual assistants. I like real employees in office. I think if your business model can't support the cost of a real employee that's going to be able to commit to your business, then you just need to make some tweaks to your model and its profitability. I just avoid the whole VA thing. You don't want to start the foundation of your business with low quality, right? You don't want to, like, look, I get it, you have to save some money, right? But build a more efficient model before you try to go for cheap pieces, right? Like, build a better vehicle, don't go for crappy parts. See what I'm saying? I know it's easier said than done, and it's very easy for me to say after I've already achieved it, but these are lessons that I learned the hard way. I've never really had a VA bring me any value, and the little bit of value they have brought me has been completely offset, and the cost savings they brought me have been completely offset by the amount of time and effort I've put into acquiring, filtering through, training, firing, monitoring them. Every time. Build a better system. Skip the VA step, or do what I did. Try the VA step and use that as a means to realize that you need a better system. Don't stay with it, please. Don't stay with a cheap business is not a good business. A premium business makes premium profits though. What else you got? Someone asked me, said I'm in the hood. Do I buy in the hood? I'm not in the hood. Looks pretty nice out there, right? I'm pretty sure that's like a UC Davis hospital. What else? You want to refi and buy the next, can we do that after buying a property from me? Not really. You want to refi and buy the next property? Yeah, absolutely. You can refi your property, buy cash from me, then refi that some other time. What would I do if I had $250 on hand right now? These are my favorite kinds of questions. What would you do? Super open-ended, loaded. Give me some extremely personal advice. You got 250 grand. Do you want to invest it, or do you want to grow it? I mean, if you gave me 250 and you said you have every option in the world and you're not rich, what do you do with it? That's your only 250. Your income is normal, reasonable. I would find a way to make that 250 do fucking backflips. I would not go buy a rental property with it, but I like to be active. So if you're looking for something passive, don't take my advice. Don't take my advice. I didn't even think about investing in rental property until this business was putting clear over 7 figures in my pocket, to be honest with you. And that's not meant to be a brag or a flex at all. I mean to say that the money I made and the money I had was way better invested in my income generating engine than it was in my investment portfolio. I didn't even own property at all until first rental properties we really started buying with the intention of keeping, that we still have today. August of 2020. Yeah, and we were making like real money then too. No need to buy them before. You empty out all your cash, and the amount of opportunities that open up to you, if you're trying to be active, the amount of opportunities that will open up to you by having funds to invest in experiments of income, worthwhile. But listen, that's not advice for the person that just wants to invest passively. That's advice for the person that wants to get filthy in a hurry, which is not easy, by the way, and you could flop. Do I do any development? No, not my business. I like buying a pre-existing product at a discount from market value. Let someone else do all the building, the managing, the put the tenants in, and just bring me something for less than what it's worth. I'm basically a day trader of property, and then I keep the extra stuff. Have I looked at Canadian real estate at all? No, it's super expensive, and I have a lot of opportunities that kind of fit my criteria in the US. Do I still wholesale? What's my business model now at ACE? So those $11 million worth of properties that we sold in 2021, they were basically wholesale deals, right? So we buy these things, they're stable, they don't need like a lot of repair, they're not distressed properties. We do a bunch of due diligence. So we package it all up for our investors. Then we have this pre-order list of investors that we have relationships with that are waiting for properties that meet a set of established criteria that they've given us. When a property comes through the pipeline, they're in line and they grab something. It's already inspected, it's already got leases, it's already got rent rolls, it's already got a property manager, it's already got a lender, it's already got insurance quote. It's got everything kind of dialed in, and then our investors just pick it up from us. So that's our business model. We end up buying the property and then reselling it to them on the same day. So the closings it's a double closing essentially, right? So we buy every property with our own cash. We don't wholesale assign the fee. It's just kind of like a really short-term flip. We don't fix them up. We don't do anything like that. So people call it wholetailing. I don't really care. How do I feel about Sacramento real estate? It's expensive and it's so far out of my niche, I just don't bother with it. I think it's one of the most overvalued markets in the country. A lot of Bay Area movement up here. And then a lot of people are using that growth to pull value forward. And I may be wrong, and it may keep growing at a crazy pace, and it might just be great deals that I'm missing out on. And I don't care because I have a model that I'm very familiar with, that I'm executing on successfully elsewhere. And that's one thing that I would like to emphasize with you guys. I should say a little more often. The market you pick is not as important, or the asset that you pick is not as important as your understanding of that asset and your ability to execute in this business. Sit on that one. Sit on that one. What does it take to double close? Money. A title company that's willing to do it, and a buyer on the other end who is ready to deposit funds in an escrow account when it's their turn to buy it from you. You can use transactional funding if you don't have the money, but like when we double close a property, basically what happens is we'll start 2 escrows, right? So we sign a contract with the seller. We're the buyer, seller sells to us, let's say a duplex for 120 grand, right? We go out and inspect it. We already assume, based on the info the seller's given us, that we could sell it for 150. We get like a verbal inspection. And then we go out and inspect the property, put all that together, get the leases, get all the do all the due diligence for the buyer, put it in a nice report, offer it to our investor at 150, right? So there's our 30K spread in the property. Then the investor signs a contract to purchase it from us. We have not yet purchased it, right? We are still under contract with the seller. Investor signs a whole new purchase contract to buy the property from us. Not to buy the contract from us, it's not an assignment agreement, but a brand new purchase agreement. And then we run 2 escrows in parallel with the same closing date. All right, so tomorrow today we're double closing on 24 units. Right, it's a great little deal for us, great deal for our investor. Now, the way it works on the closing date is we're gonna wire the money to the title company for the property. So I'm gonna wire too much money for these 24 units today out of my account. The title company is gonna get my money. The seller of the property is gonna go to the title company's office or do a mail away closing. They're gonna hand him a check or wire him the funds back after all the docs are signed. While he's doing that, the buyer's funds, who's gonna buy it from me, is already in an escrow account with the title company. They've given us the okay, kind of a clear to go or a clear to close. And that buyer signs docs to purchase from us on the same day. Title company wires us our money back probably on Monday. So it's gonna be a kind of a quiet weekend in our bank account, buying 24 units cash for a weekend. But we get our money back pretty fast, and it's secure because we make sure that the wire's been initiated on the buyer's side. We pick buyers that we trust. We work with a bank that we trust, et cetera, et cetera. Title company knows our process, all that good stuff. So that's how a double closing works. I'll take one more question before we scram. Give me a good one. Give me a creative one. This is a quick one. This won't be the last one. How long did it take for me to build the ACE rental property calculator? A night. Like an evening. And I built it for us here at the office, and then I made it available to you guys, right? So I really took like maybe a half of a morning making it for us, and then I made like a beefed up, prettier, and like more complete version. I modified it over the course of an evening for you guys. Kind of put it out there casually, like last January. It's like, these aren't gonna sell. And I think like the first night it sold like $700 or $800. And I'm like, oh shit, this is pretty cool. And then it's kind of, it's grown since then. So yeah, that kind of was a little bit of a blindside in a good way for me. I didn't think that a rental property calculator would go so viral, but it did. Nowhere near as much time as like making that course. Making the course, I was so overwhelmed by that, and I underestimated, I'm not gonna lie. Creating the outline and the curriculum and making it like cohesive and coherent for you guys and valuable, and deciding what to put in and how to demonstrate material so it'd be engaging and not boring for you. Man, I think I spent a solid month and a half, and the last month was like 4 or 5 hours a day of building that course. So yeah, that was a massive amount of work. I did underestimate it. So yeah, the folks who make that stuff on the regular kudos to them if they make good ones. It's $4.95. It's way too cheap. It's like 8 hours of video, but I want you guys to all have it. And if you all buy it, then you'll probably buy like my master classes I make on like due diligence and other stuff, because you're gonna feel like it's a freaking steal for $4.95. Oh, you like my little bubble, my little face bubble in the bottom? You can probably see that I did some of the videos at my house then in the evening. But yeah, it's $500, and I'm not going to raise the price this year. Probably not. Maybe like at the end of the year I might do it or something like that. But I just want everyone to have access to it. Anyone who really wants to study 8 hours of like how to buy real estate virtually probably is committed enough to not feel like $500 is a lot of money. And the folks who do feel like 500 is a lot of money probably aren't ready to take those steps anyways and actually buy a property, because properties are expensive. So they'll probably just watch the free lives. So yeah, that's how I kind of price things out in my head. It's kind of funny. I talked to a couple people who sell different programs, educational programs on social media, and have been doing it for a while. And they were all like $2,000, $5,000. I'm like, nah, I can't do it. I don't know. I make enough money from the investment firm. Maybe I believe the volume approach works better, but something about putting that up for $5,000 on here would make me not like sleep well at night. I don't know. Or even $1,000, even though I feel like it's worth every penny of $1,000. I think it starts to get into like rip-off territory once you add like the extra zero to it. Hit me with that. I'm still waiting for that good last question. How do I think the housing market will look like for the remainder of the year? Will the market go down with interest rates? That's a very, very difficult thing to try to predict. It's clear to me that the housing market is overvalued. It's pretty clear to everyone that the housing market is overvalued, like historically overvalued, right? I think quantitatively it's historically overvalued from using affordability indices, right? I also think we are in a demand prime, and demand comes in like waves, right? I mean, people go, well, it's just supply and demand. There's just not enough supply. Well, it's not like a bunch of 30-year-old babies were born onto the earth during COVID and all bought houses at once, right? Like we didn't have this massive population spike that created this oversupply, but we did have a massive population spike 30 to 40 years ago in the millennial generation. They're all coming of age now, and they're approaching this, like they had this latent demand, and now the demand is being realized. They're turning that potential into kinetic energy, if you guys like science references, because I just can't control it. I have to hit you with them every once in a while. And they're all buying at once. And they happen to be buying in a time where quantitative easing is kind of like at a peak and is reaching the end of that experiment, right? And the housing market's coming out of a historical bottom, so it's driving upwards. And we've seen a lot of like upwards momentum since 2009, 10, 11. It depends on like which city you're in. But I know that when I bought my house in 12, it started coming up fast as I was buying, like right after. So we've seen about a decade of upwards mobility of the housing market at a pace that is not generally sustainable for growth. A lot of that was recovery, and I think that creates myopia around buyers. What does that mean? That means buyers they become conditioned to what happened yesterday, the day before, and the day before, and they can't remember too far beyond that, right? So they feel like the trends of yesterday are going to be extrapolated in perpetuity, like they're normal. If that sentiment were to shift, the housing market would change, for sure. Now, if interest rates continue to go up, obviously things become more expensive. That slows down the growth. That curbs the growth at the same level of demand. Now, if the demand goes down, the demand for purchase goes down with the actual cost going up, then you're going to see, or the cost of mortgage going up, then you're going to see the housing values drop for sure. But it's so hard to predict sentiment changes. What's going to create a sentiment change? We have geopolitical events going on right now. We are going to have some economic events going on. The stock market's already taken a big L in certain sectors, and I think other sectors are driven by artificial factors. So what happens when liquidity changes and affordability changes? I don't know. If the job market gets softer and people are not getting paid as much, and then cost goes up, cost of money goes up, then that could lead to housing prices correcting, or we could just see very, very stagnant housing prices for an extended period of time. Think of it as like we took all the future appreciation as an advance, right? And since we took it as an advance, we don't get it tomorrow. That could be a possibility as well. I don't know. That shit's complicated. I'm not an economist, but I'm definitely not a speculator either. So we'll leave it at that. Thank you for joining me, guys. The courses are all in the bio if you're curious. I saw a couple people ask in there. Hit me with some topics for these lives. Before I wrap up, I like hearing your questions because they kind of give me things that I realize I don't address enough, and they allow me to kind of focus on what you want. I'm open to it. I'm not trying to teach you what I think I need to teach you. If you guys have like complex topics you want me to talk about, I'm not going to make a 60-second video on them, right? I'll make it a live topic if it sounds interesting enough. So shoot me suggestions over DM over the course of the week. I'm always open to it. If one thing like clicks is, hey, I haven't talked about that in a while, and look through my old stuff, right? Don't just come here new. Don't watch any of the old videos and then just ask me to do something on like a topic that I've covered a week ago, right? But look through my old stuff. If there's something you feel I haven't talked about in a while that would be helpful to the group and just kind of fun and engaging, and a little bit clickbaity, and I could drop some F-bombs and, I guess drink coffee instead of whiskey, then I'm open to it. All right, y'all. Have a great weekend.